You know, it's more like some. Hello. Yeah. So I have a client I want to take out today for today. The other one has not made up his mind. So why Mr. Visa? The last one you sent to me. Yeah, I've sent a message. The last one you sent to me. Yeah. Elisha, from I need you for a deed. Yeah, please. Yeah, please. I want to give you my ATM. I need bread. Can't do anything. Why? They're working in that generator. Which is the generator? That my generator. Which is the generator? I've asked, I'm waiting for feedback. I've asked, so I'm waiting for feedback. I've asked, I'm waiting for response. So what's the business for October first? Okay. The stuff you posted on your story. Hmm. Hmm. Hello?
But maybe you call on normal phone.
But it's good now. I think I got a call for that one.
Okay.
But I can hear you. Go on.
Okay, so that's basically what I want. So I'm thinking of taking the price.
How much is the rent with the 35 seater?
The price is then I have one of and I have one of 400. But I want to look at one of like 35 so it's going to be 2 hours.
Wait, the one of 250 per hour?
Yes, per hour.
Okay, that's 500K.
Yeah, let me send it to you.
Okay, but the cruise now, are we going to have food on the party? What's the catch and how are we making money
I
from
think
it?
it's what
Will there be food on the party, on the cruise? How are we making money from it?
now there's going to be food, there's going to be drinks. I'm going to do mocktail. There's going to be pizza there, which is okay, small chops.
Small chops, yeah.
Oh, maybe pasta or rice, something. Or to be like a serving, like you serve for yourself. So I'll just buy like a tray of those things that you serve, then a cocktail. I think that's basically what I'm going to do. Then the take home is going to be a card, like my card, and what's it called? So if this is going to be joint, and this card, well, you don't share them your card. Your card. Then I want it like a water can. I'll take it off for that.
No, that's them.
As this space they joint, so I don't need to customize. So I'll just check for like you take off that water can or water form. So that'll be like take home. And then like they say thank you card, like a thank you card.
Yeah, thank you card. Okay, that's nice. So like that 500K if 35 people show up is like around 1.2 million.
Yeah, that's 1.2 million. So if you so see at the end of this we might not but then we make anything but the main purpose of this doing is just to push my brand out.
No, why won't you make money? You make money now. Are you joking?
But we're not like this take home might not be much.
Like for the people attending, as in profit.
But the fact that our brand out there.
For profit,
yeah, for profit, the sense of profit might not the take home might not be much. Might have it for people 300K or max or 200K.
It's planning. You don't need much food. So you know that what you need is 35K and a half. What they don't want to cruise on you're cruising for 35K per person. You're going to buy, just look for. Anyways, I think I have plug for where we can get cheaper light. I think I'm interested though. So the thing is to push it out. I will kind of post it. I'm interested, madam. I'm interested, yeah. So it's to push it now, to push it out people. So I'll make a post. I'll make a post on it. I'll make a post.
I'll take the flyer. So I'll send the flyer in for this is 10 o'clock. Before 12 o'clock, I'll send the flyer. So I was thinking of publishing it on Eventbrite. If it's on Eventbrite, to sell out faster.
How much to publish on Eventbrite?
I don't know how much they post on Eventbrite. But just like a one-time post, so it will not be maybe like 8,000.
Oh yeah, now that makes sense. If it's going to sell off faster, that's fine. So we can use it, and that 250 we can also get a discount on the boat cruise. So
you can get what?
We can also get a discount on the boat cruise, like on the boat.
Yeah, definitely. When I'm done, I'll definitely get a discount for it.
Okay. Yeah, that's fine. I'm actually in. So I will still make the flyer, send me the flyer, I will post it. But we still need to make like a video, like a full video where we like invite people, like where we can post on TikTok. I feel like if you post on TikTok, that's going to be like that you can there's a boat cruise where you can have fun, whatever. So if you post on TikTok, yeah, and network with people, So Yeah. Yeah. Okay. So, but we need to, well, just do the flyer first, then we can do all the other planning, like food. Like food should not be more than 300K. Food and drink.
Anybody that wants to bring them, so it's like a people. If you're bringing,
No, we don't need kids. We don't need kids. We don't need kids. It's going to bore the whole place out. We don't need children.
Yeah, that's true.
Just like, yeah, just where to meet a guide and like, so just where to meet people. So we don't need kids.
I'm thinking I was putting like a dress theme, maybe like a white.
All white cruise.
Yeah, like a white, yeah.
Okay. Okay, you can put it now. You can put like all white cruise, whatever. You can put it.
So I'll send you a brief, right? The brief will contain, so you don't have your own caption, but the brief I want unlimited drink, network, picture perfect, like in terms of picture perfect, like we just said that we have a camera of this, so like but just picture perfect.
Okay, yeah, just yeah, so we have to buy but we need like so we need like not like an MC, a hype person. Like any guy we can pay like 30K to come on the cruise with us, hype man, play the music. We're going to get like, if you have music boys.
Just for 2 hours.
It doesn't matter if you have anybody step around you that is very lively, that can ginger crowd. Yeah, that's good.
So that one is like about this Polaroid camera that I bought, so that one also says like.
Yeah, I can even take my cousin's one self. I have my cousin's one. I think she has film on it.
I'll buy what's called this camera. I'll buy the one of 40, so everybody can have like one.
But that's fine. What's today's date? Yeah, just bring it, put it down. Let me start. Put it down. Let me put it out. I feel like if I put it out, I might get people. Yeah, put it out. Like, do the graphic. Send me the graphic. I'll see editing. Then we actually even need to meet so that okay, you're coming for the event on Thursday now, the networking event, Big Five Culture. So on the event, you're going to do like a video advertising the both things. So yeah.
Let me get on with the guys. I'll send it to you.
Okay. Welcome for our Christmas party. We have a Christmas party on October 1st. Come around. Come and cruise. The good thingy. Hey, come on. Let's go. It's 35K. 40K. Hi. Hello. When is this class starting, please? Because I've been on this meeting for like 30 minutes now and nobody's saying anything.
Good morning. The class will start by 11, although They always put 10:30, but the class have never started 10:30, so let's wait till 11 o'clock.
Oh, okay, that's fine. All right, sure.
Yeah.
Este está bom.
mo ti wá bá yín lẹ́ẹ̀kan mo wà fàdé yìí.
Good morning, everyone. Good morning. Hello.
Good morning,
Can
sir.
we hear? Okay,
Yes,
good
sir.
morning. Thank you. Yeah, good morning. We are welcome to another section of the class today. So we'll continue from where we stopped. Last week, we started with company income tax, taxation of companies. So where we are able to look at the various categorization of companies. So I told us that we have two categories of company. It's either a company is resident or non-resident, which can also be called Nigeria or non-Nigeria company. Then apart from that, so we also made mention of the basis of calculating tax. So where we talk about the total profit basis, minimum tax, and some other dividend basis and turnover basis. So we have made mention of those. So today we'll proceed. So I think we stopped at expenses incurred. No, okay, we stopped at intercompany interest, where we are able to solve a question. Am I right? Somebody should please respond. Intercompany interest. Let me check. Page, I believe we stop at page 12. Is that so? Hello? Hello?
Sir, we stopped at Avila Manufacturing.
Hello? Are we there?
Yeah, we stopped at Avila Manufacturing. We
Yeah,
solved
okay.
the question named Avila. Hello, sir.
Have we solved question on Avila?
Yes, we saw. That's where we stopped.
I can hear you, okay. Okay, we've solved question on Avila, Abi.
Yes.
Okay, yes. So we are still going to look at, proceed further. So we are still going to look at another question. So which is the second question in that material. We also need to look at the second question in the material. On page 16, second question on page 16, question relating to what? Adama and Co. Page 16. So I'm coming. So I want to try to I'm coming. Just give me some. I'm trying to okay. So we have the question. As your firm, Adama and Co. was appointed as tax consultant to Shida Limited in January 2021. An extract of the company's set of financial statements made up to December 31st, 2020 as follows. We have the gross turnover, gross profit, profit on disposal of plants, property, and equipment. We have the total amount to be 315,594. Then we have the admin and other expenses, salaries and wages, directors' remuneration, electricity and generator running expenses, rent and rate, repairs and renewal, motor vehicle expenses, donation and subscription, interest and bank charges, bad and doubtful debt, miscellaneous expenses, loss of fund, audit fees, legal and professional charges, depreciation. Then the total figure we have it. Then we have the net profit to be 42,264. So we have the net profit to be 42,624. and substitution include Lagos Chambers of Commerce, Motorboat Club, Polo Club, political parties, approved National Relief Fund. We have the figure. We have bad and doubtful debt consists of allowance for doubtful debt, specific provision, bad debt written off. Then we have miscellaneous expenses include court fine, exchange loss on remittance and balances, allowable office expenses. Then we have loss of fund. A director defrauded the company to the tune of 9.8 million. 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 Legal and professional charges include legal and professional charges include legal and professional charges
Sir, we cannot
include
see. You need to move up.
yeah.
We can't see where
Okay.
the legal and professional service is.
Let the legal and okay. Can you see it now? Legal and professional services. This is it.
Okay.
Legal and professional charges include debt collection and retainership fee, land acquisition. Then the next one, we have capital allowances was agreed with revenue amounting to 70,380,000 and losses incurred from previous period amounted to 3,450,000. Required. Compute the income tax liability payable for the relevant year of assessment. So we are asked to compute the income tax liability payable for the relevant year of assessment. So one thing you need to look at is you need to look at which year are you giving this information? Which year does it company income tax liability is payable on preceding year basis? So since that tells us that the year of assessment will be what is 2021 year of assessment. The year of assessment. After knowing that, so the next thing, so let me share an Excel, so where we are going to so we have yes. So we now the first thing is Shidan Limited. The name of the company, Shidan Limited. If you check the question. So the name of the company. I hope we can see my Excel screen now. Abi?
Yes, sir. We can see it.
Okay.
But I thought we were solving one Adama and Co. Abi Adama.
Okay. Shidan. So you write the name of the company, Limited. So the requirement we ask to computation of tax liabilities for 2021 year of assessment. Please, in the exam hall, always indicate this. Without this may lead to loss of valuable mark, because this heading also are awarded mark by the examiner. So let us also comply with the headings. So we have information. If you go back to the question, we have information about the net profit. So since we have information about the net profit, that tells us that we are going to adopt the net profit approach. That tells us that the net profit approach will be what? Will be adopted. So in order to adopt the net profit approach, we start with what? With the information about the net profit. So we start with the net profit. So let us go to the question back. So in the question, so we have the net profit reported. So net profit reported to be 42,264 as the net profit. So we are going to state that out. So we start with the first one. So I'm going to start with net profit. Net profit reported. So which is what? 42,264. So that is 42,264 in thousand. So all this information are in 264,000. So let me put the 1,000. So after that, we know that after the net profit, we normally add a particular item. So what do we add? Add what? What is the name of the headings that we usually add first?
Disallowable expenses.
Yes, add disallowable expenses. Add disallowable expenses. Add disallowable. So we add disallowable. So we now go back to the question and look at those expenses one by each, one after the other, to know which one. So I told us earlier that for any company, one of the disallowable expenses you should think of is what? Depreciation. Because they are also going to claim more capital allowance on the asset. So you cannot claim capital allowance and also what? Enjoy depreciation as well as an allowable expense. And depreciation is not uniform. So that is why it will be what? It will be disallowed. So disallowable expenses, we have what? So let us look at this. So we have salaries and wages allowable, director's remuneration, electricity and generator running expenses, rent and rate, repairs and renewal, motor vehicle, donation and subscription. So let us first of all look at all these things before we go to the notes. Interest and bank absolute debt, we are not. So when we get there, we'll look at it. Miscellaneous expenses, loss of funds, all these things. Legal and professional, then depreciation.
Yeah.
So we have the depreciation as what? As a disallowable expenses. 42,825. 42,825 depreciation. 42,825 depreciation. 42,825. So we have what? Depreciation, the first one, depreciation. So that is the only one that is unique from the question. So after getting the unique one, so the next thing for us, we can now go back to the additional information. Let us now go back to additional information. So under the additional information, they said the following additional information is provided. Number one, donation and subscription include Lagos Chambers of Commerce. From those lists given to us, Chambers of Commerce is part of what? Body that was donation is allowed to be made to.
Yes,
Yeah.
sir.
Yeah, Chambers of Commerce is part of the bodies that donation can be what? Made to. So that means it will be what? It's an approved body. It will be allowed. The Motor Boat Club, is it an allowable
I don't think so,
body?
sir.
No, it's a
No,
club.
sir.
I told you that any donation to club, social club or social donated was recognized professional body or recognized trade association. So that's it. So Motor Boat Club. So Motor Boat Club, we have Motor Boat Club 300. So
Yeah.
we have it as Motor Boat Club 300. So let us go back to our solution. Motor Boat Club 300,000. So after that, after the Motor Boat Club, the next one we have is what?
Polo Club.
We have Polo Club. Polo Club is also what? It's also
It is
not
allowable.
allowable. Yeah, it's allowable. We have it as what?
250.
250. Yeah, Polo Club. You also put it there. Polo Club 250,000. Then after that, we have the next one to be what?
Approved
Political party,
political parties.
political parties. I told you any donation to political parties is also what? Not allowable. Any donation to any gubernatorial or presidential candidate are not allowable for tax purposes. So political party, 7.5 million. We also have political parties, 7,500,000. Then after that, after the donation, we have approved National Relief Fund. Without even looking at it, that word approve in front has told you that what? This is part of the body. Yeah, it's allowable. So relief fund, they are also part of the National Relief Fund. It's also part of the body that what donation can be what can be made to. So after that, the second, no, we have a bad and doubtful debt, include allowance for doubtful debt. Allowance for doubtful debt. I told you when I was explaining that, where the examiner did not specify whether he did not put whether general or specific, what do we assume?
We assume general.
We assume it is general. Please let us take note of that. Where the examiner did not specify, we assume. So that means this allowance for doubtful debt now, because the examiner did not put specific, or so we assume it is general. And general provision for bad and doubtful debt is what? Disallowed. Yeah, so 3,000. So we have provision for bad and doubtful debt. So provision for bad and doubtful debt. 3 million. Then after that provision for bad and doubtful debt, the next thing we have is what? Specific provision. I told you that specific provision is what? Allowable. It's an allowable, yes, it's an allowable expenses. Specific provision is an allowable expenses. So that will be then bad debt written off. Bad debt written off. Any debt that has been written off. So since this it has been stated as what? Written off is no longer a provision. That means it has been what? Certified as what? As a bad debt. And any bad debt written off, once certain condition has been met, will be what? Will be allowed. So for this, because this amount has been written off, it will be what? An allowable expenses. Then after that, we move to the next one, which is what miscellaneous expenses include. Miscellaneous expenses, we have a court fine. Any form of fine and penalty, is it allowable?
No.
No, fine and penalty are not allowable. So we have court fine, it's also what disallowed. Court fine. 600,000. After the court fine, so we have the next one to be after court fine, we have the next one to be what? Exchange loss on what?
Remittance and
balance.
balance.
What? Remittance and balances. Exchange loss on remittance and balances. I mentioned something when I was explaining exchange loss. I said under exchange loss, you can have what? Exchange gain and losses. I told us when you have exchange gain that is realized, that will be what? Taxable. Exchange loss, that is what? That is realized, it will be what? Allowable. Then exchange gain, that is unrealized, it will be what? Non-tax, it will be disallowed, non-taxable. And exchange loss, that is what? Unrealized, will be what? Disallowed. So this question now is now giving us what? Exchange gain, exchange loss on what? Remittances and balances. Exchange loss on remittances and balances. So we normally have two forms of what? Exchange losses. We normally have two forms of exchange losses. I would like us to try to note this information down. Please, let us note this information down. There are two categories of exchange losses. So this will give us a guide to know when what? When to allow exchange loss and when to what? When to disallow exchange loss. So there are two categories of exchange losses. We have what? Exchange loss on transaction. The first one we may have exchange loss of transaction of intercompany balances. Exchange loss of, I hope we are noting it down. We may
Yes, sir.
have exchange loss on transaction of intercompany balances. That is one exchange loss. Then the second one is what? Exchange loss on remittance and balances. 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 That first one, the first one, exchange loss on transaction of intercompany balances is what? Is unrealized exchange loss. It is unrealized exchange loss. Simply because it is simply what? Exchange loss that occur as a result of what? Conversion of foreign liability at different rates on what? On the financial position dates. Conversion of what? Foreign liability at different rates on what? On the statement of financial position dates. And that first one, exchange loss on intercompany balances, is what? Unrealized. So please let us take note of that.
So you
Why the
said the
second
first
one
one. So you said the first
is
one is unrealized.
unrealized? Yes, it is unrealized.
Okay.
It's unrealized because it's just as a result of conversion. Conversion at the date of what? The date of the balance sheet. Then why the second one is realized? The second one is realized. The second one is realized. It is usually the difference between the book value of foreign liability, difference between the book value of foreign liability, difference between the book value of foreign liability on the date of settlement. Difference between the book value of foreign liability on the date of settlement and the actual amount at which the liability is eventually settled. Difference between the book value of the foreign liability on the date of settlement, difference between book value on the date of settlement and the actual amount the liability was finally settled. So it is what? That's what? Exchange loss on remittance and balances is what? Realized. So please let us get that. So that will give us a guide because the examiner may give us it may not give us this one in subsequent, in another example, it may give us the one relating to exchange loss on what? On intercompany what? Balances. So since this one is realized, is it going to be allowable or disallowable?
Realized. The realized one will be taxable.
But it's not a gain. It's not a gain. This is a loss.
Loss.
Is it going to be allowable? Is it going to be allowable or disallowable?
Is allowable.
Is what? Is allowable. So that means this exchange loss is what? Is an allowable expenses. So it's an allowable expenses because it is what? Realized. Please, where it is a gain, it's going to be what? Taxable.
Yes.
Know that. Then we have what? Allowable office expenses. Because the word has put that word allowable there, it's going to be what? An allowable expenses. Then the next one, we have a loss of fund. A director defrauded the company to the tune of what? 9.8 million. Any form of what? Defalcation or fraud committed by what? The staff of the company is what? Is it allowable or disallowable?
Any
form of fraud, defalcation.
Okay. Is disallowable.
Is disallowable. Because it's expected that the company will have an insurance policy that they are going to collect or reward. So this amount, 9.8 million, will be what? A disallowable expenses. So loss of fund. So we have we continue from there. Loss of fund. So how much is that? 9.8 million. 9.8 million. Then after that, the next one we have is what? After the loss of funds, we have
We have
legal and
yeah,
professional charges include debt collection and retainership fee. Is it allowable?
yes.
Debt collect, yes, you are collecting. Retain, I told you, every company is expected to have what? A legal representative, a secretary, and what? An auditor. According to what? According to the CAMA. And any money you are paying them as your company lawyer or as representing your company is what? An allowable expenses. Because the law has made them to be what? To be part of your what? Statutory expenses. Then land acquisition. Is land acquisition going to be allowed?
Yes.
Why?
Yes. It's an
Land
asset,
is
right?
asset. This assets
Okay,
available
yeah,
for
so
cap.
it
No,
cannot be
now
an
it's not.
asset.
It's
Yes,
not.
sorry. Yes,
It's
yes.
not. It's not going to be what? It's not going to be
Mm.
any expenditure on what? Non-current assets is what is disallowable.
Mhm.
Expenditure on non-current assets is what? They are
That's
all
right.
disallowable. So please let us take note of that. So we have a land acquisition. How much is that?
3.750.
3,750,000. 3,750,000. With this now, we have successfully gotten all the expenses. And apart from the expenses that we usually add, as well as the disallowable expenses, there's also something else that we normally add. What do we normally add again? Who can remind us? We add disallowable expenses and one other thing. We normally add disallowable expenses and we also normally say add what? We add disallowable expenses and one other thing again. There are two major items that are usually added after the net profit. Disallowable expenses and what? Taxable income. Taxable income. Taxable income omitted.
Oh, okay.
Taxable income omitted. In this question now, we are not told that there is any income that was omitted when they were computing the net profit. So as a result of that, so that amount will be what? 0. Here will be 0. It will be 0 here. Then after that, we now less what? We usually less. What do we normally less?
Capital
What do we
allowance.
less? No, before capital allowance. There's something we less
Okay.
before capital.
Loss
Before you.
relief.
No. Before we even go to that, yes, that's what? Allowable. Thank you. Allowable expenses omitted. We have allowable expenses omitted. So what are the allowable expenses omitted? So do we have, in this question, we are also not told it is what? 0. Then we also normally less another thing again after the allowable expenses. What is that? Oh yeah. What do we normally less? We normally add 2 items, we less 2 items. Check our previous listing now.
Is it
Check the
loss relief
form.
or the capital allowance?
No. Before we get to all those items, when you are doing adjustments, we normally less 2 items. We also less what? Non-taxable income. Less non-taxable income included. Non-taxable income included. So let us now go back to the question. At the beginning of the question, we have a gross turnover, we have gross profit, then we have a profit on what? On disposal of what? Plants, property, and equipment. Profit on disposal of plants, property, and equipment. Profit on disposal of plants, property, and equipment. That is what? That is a non-taxable income because this particular profit is liable to tax on what? It's liable to chargeable.
Something capital gain tax.
No, capital gain tax. It's chargeable to capital gain tax. So it's not supposed to be what? To be here. But they have included it before they what? Before they arrive at what? At the net profit. So what do? You must eliminate it. So you now eliminate it. So that is 7,860. So profit on disposal. So you now say profit on disposal of property, plant, on disposal of PPE. How much? 7,000,000.
7,860,000.
7,860,000. So that happens to be 7,860,000. So we less that from that one will be less 7,860,000. So the resulting figure will now give after when we finish this adjustment. What do we call the value we are going to arrive here at here?
Accessible profit.
Yeah, accessible profit or what?
Adjusted profit.
Or adjusted profit is the same. This will be this plus this plus this. This plus this minus this will give us the value, which is what? 102, which is accessible profit stroke adjusted profit. Accessible profit stroke adjusted. So after you have considered the accessible stroke adjusted, so that's when you now talk of what? Loss relief and capital allowance. So let us go to the question again. Under the question, we were told in the question under the last information, additional info before the requirements, capital allowance agree with revenue amounted to 70,380,000 and losses incurred from previous period amounted to 3,450,000. So a company has a right to relieve their loss from where? From subsequent profit till what? When does company have a right to relieve their loss till when? How many years?
There's no year.
No, it is to what? Infinity, indefinitely.
Yes.
So company has no restriction. But in the case of individual, they can only relieve their loss for how many period?
4 years.
Many years? 4
years.
4 years. So they have what? Only 4 years to relieve their losses. So please let us look at those things. So this loss now will now be brought in here. Then we have what? Loss. So you now consider the loss. Then we have a loss brought forward. So how much is that? So we look at the amount of the loss, 3,450,000. 3,450,000. So this loss now, you are going to relieve it. Loss, relieve. So because the accessible profit can accommodate this total amount, so we are going to remove all this amount from here. So all this amount will be removed from here, 3,450,000. So this will be minus 3,450,000. So the resulting figure will give us this, which will be this minus this. So will give us the resulting figure, which is this. So no loss. So this will give us nil. So no. So after the loss, the next thing for us is to bring in capital allowance. So we are told no capital allowance brought forward. But capital allowance agrees with what? 70,380,000. So we bring the capital allowance. Capital allowance for the year. Please, 70,380,000. I need to mention this. In the exam, don't go and do wuru answer. In the sense that don't go and put the capital, don't go and deduct the capital allowance straight away. If you deduct the capital allowance and this loss straight away, that is You just bring this law 3,450 here. It's going to lead to loss of mark because mark will be awarded to this, while mark will also be awarded for this. So you have to split them separately. So the capital allowance 70,380,000. So, and capital allowance, according to the law, is usually restricted to what?
66 to third.
Two-third of accessible profit. So you now say capital allowance relief. So before you do that restriction, you now let us go back to the question to know what is the nature of business. In this question now, they just told us was appointed Shida Nigeria. They didn't tell us the nature of the business. When we are not told, we assume what trading company. In that case, we are going to restrict it. We are going to restrict their capital allowance. So where we are not told, we assume that the company is a trading company. So we restrict the capital allowance. So capital allowance relief will be what? 2/3. 2/3. So if you calculate 2/3 of 102,429, 2/3 of 102,429, that should give us how much? 2/3 of 102,429 will give us how much? 2/3, 2/3, 2 divided by 3, multiplied by 102,429. Sorry. Okay. Equals to 2 divided by 3, multiplied by this value, will give us how much? 68,286,000. So that means the implication of that is that we cannot deduct the total of this 70,380,000. It will be restricted to this amount. So this amount now is what we are going to transfer to this space and remove from here. So the balance now, the balance will be taken to previous future years. So capital allowance, it will now be capital allowance carried forward, which will be this equals to this minus this. So we'll be carried forward to subsequent year. So which will be the amount of, so after that, so you close up this. So the resulting figure of what you have after this, which is what this, which is equal to this minus this, will now give us what they are going to pay tax, which is what? Which is the taxable or total income. Total profit, yes. Income is used for individual, profit is taxable or total profit. So this will be the taxable or total profit. Yeah. So after getting this taxable or total profit, the question did not ask us for taxable or total profit. But before we can do the requirement, we must get what? The total profit. Because the question asks us for what? Tax liability. So we can now go to computation of tax liability. Then the tax liability will be company income tax at
30%.
So you now go back to the question. You look at the turnover. You now look at the turnover of the question. If you look at the turnover, they told us gross turnover given to us by the examiner happened to be what? 860,250,000. And any company with turnover of 100 million and above is regarded as what category of company?
100 million. That's medium.
No, 100 million and above.
Yes, it's a large company. Sorry.
Large company. And their rate of tax is what percentage?
30%.
30%. So that means the rate of tax we are going to apply will be what? At 30%. So this will be what? So the tax liability will be equals to 30% of multiplied by this amount, this total profit. Will give us. I also made mention to us that anytime you are asked to compute tax liability, you must also apply what? The minimum tax rule. It is compulsory you apply the minimum tax rule, unless where the examiner did not require. It is expected that the minimum tax rule must be adopted. So you have you must also calculate the minimum tax. Then the minimum tax rate for this year, for year 2021, is what? What is the rate what is the rate of minimum tax?
0.5.
0.5 of what? Gross turnover. Turnover. Then, but the minimum tax was reduced for certain year of assessment, which are what? I told us the minimum tax was reduced to certain percentage for 2 years of assessment. We made mention it. Let us go to I told us this information. Look at it. Looking at the material, so let us go back to our minimum tax on that page. Look at it. Page 13. Look at it. On page 13, it was stated that minimum tax is to be computed at 0.25% of gross turnover, less frank investment income. For assessment year falling due between what? January 2020 and what? December 2021. So that means when you have any year of assessment that is what? 2020 and 2021, please, the minimum tax rate for company is what? Is 0.25%. So please let us take note of that. It will now be what? 0.25%, not what? Not 0.5. Because of what? Because of the year of assessment. So the minimum tax will be what? 0.25%. So this 0.25 is what? That value is 0.25 divided by 100 multiplied by that value. So 0.25 divided by 100 multiplied by gross turnover. So what is the value of the gross? So let us go back to the question. In the question has specifically given us the gross turnover.
860 to 50.
Yeah, to be 860 250. So just apply that amount of what? 860 of 860 250 million.
Yeah.
So to get what? To get the growth, to get what? The minimum tax amount. So that will give us 860 250. So that will give us 2150625. 2150625. So after calculating it, which of them do we select? Is it the lowest one or the higher one?
The higher.
Why? Why are we
It's the higher
selecting the higher?
between CIM, the company income tax, or the minimum tax.
Why, if they ask you, why is the higher amount selected? What is the reason why we are selecting the higher amount? You must be able to know that. So what is it? It's because what? The tax authority, they want to what? Maximize revenue. What they need more revenue. And to maximize revenue, you need to select what? Higher amount. So the higher amount, so our total tax liability will be 9207,500. Company income tax, sorry, will be 9207,500. Why the what? So also, this company is what? You are not told that it's a non-resident company. Every company that is what? Incorporated in Nigeria is also liable to payment of what? Tertiary education tax. So they are also, so this company is also going to pay what? Tertiary education tax, TET, at what? So the rate of tertiary education tax differs. It can either be what? 2% or 2.5% or 3%. So I'm going to, let me look for a question, a question. So I'm going to post something here now related. So in the exam hall, you don't need to stress yourself. The examiner is going to give you that information. Your own is just going to look at the year and apply it accordingly. So I want to upload something now. Please just give me a little time. So I want us to look at it together so that you know in the exam, you know when to apply it and what. I'm coming. Okay. Yes. Okay. So I have it as so I just okay, look at it. This information, can we see what I just shared now?
Yes, sir.
Yeah, this information will be given to you in the exam hall. Just go to the back of the question paper. You will see the rate. Some rate will be provided to you in the exam hall. So you can see the capital allowance rate. You can see the rate for capital allowance for initial and annual. Then you can see also what the rate for what for the personal income tax, the company income tax rate. You have it there, 30 and what 20%. Then you after that we have what tertiary education. So this is where I'm going to number 5. I have the tertiary education tax rate. Look at they said 2% of accessible profit up to what? December 31, 2021. 2.5 accessible profit with effect from January 1 to 2022. January 1, and 3% of accessible with effect from September 1, 2023. Finance Act 2023. So please, it is this that you are going to follow to determine what will be the what tertiary education tax to be what adopted. From that question, the year of assessment happened to be which year?
2021.
2021. So what will now be based on this information now? What will be the rate of tertiary education tax?
2%.
2%. So it will be what? 2% of what? Accessible
Profits.
profit. So the tertiary education tax will be what? 2% of, so tertiary education tax at what? 2% of accessible profits. So which will be equals to, which is equals to 2% multiplied by, so you go to not your total profit or not your tax of what accessible profit. Tertiary education tax is based on what accessible profit. So that is what, so that is the where the money that you usually see at all these higher institutions that they will write TET fund. That's where the money is coming from. So in the exam, where the examiner, assuming this examiner asks us for total tax liability now, assuming the examiner asks us for total tax liability, please, we are going to add these two information together. Please let us take note of that. But in this question, the examiner did not ask us for total tax. He just asked us for what? Tax liability. So this information will be separated. This one will be what? Will be closed. This one will be closed. Why also this one will also be what? Will also be closed. So please. So depending on what the examiner asks you, we give you what? We serve as basis that you are going to
Hello,
adopt.
sir.
Yeah?
So isn't not 2% of this 3693 we are doing?
No. Tertiary education tax is based on accessible profits, please. Based on accessible profits. It's based on accessible profits. Is that clear? So it's not on the taxable or total profit. It's based on accessible profit. So please, it is only the company income tax that you are going to charge on what? On the taxable or total profits. So if you now look at the material, looking at the material, you see that we have the same information. So looking at the material, so you can see the solution from the material as what we have under what we did. So depending on, you may have a question that is up to 4 or 5 pages, but the solution may not be even up to what? Up to 1 page. Big to one, make it so. Your own is just to determine which one is allowable and which one is what disallowable. So that is where that is what you now need to know. So which one will be what? Will be allowable and which one will be what? Will be disallowable. Please let us take note of that. So it's very important that we know that. Then after that, so that's with that now. So I believe, so when you see a question, so what you need to do now is to have a good understanding and knowledge of allowable and disallowable expenses. Try as much as possible to familiarize yourself with the notes provided, so that you know those expenses that are allowable and those that are disallowable. Because some of the expenses that are still allowable or disallowable may not be part of what you have solved now, but it's already part of the expenses that we explained earlier. So the examiner may give you. So it is now left for you to know whether that expenses is allowable or disallowable. So please let us take note of that. So please let us take note of. So before we go, so I want to introduce us to something else today. So it's just a written aspect, which is called
Sorry, sir.
glossary. Yeah? Is
Yeah.
that a question? Sorry.
Yeah,
Do you
I
have a
made
question?
I made a mistake earlier. This is the first question we are solving on company income tax. So.
Because I was saying it that I don't think
Yes,
we have solved any
sorry.
question
Yeah, I
before.
was looking at VAT. So sorry. This is the first question.
So this is it. I know that we have not solved any, because I know that where we stop, we stop at this thing. So before we go to this thing I want to, so let us look at the first one as well. So let us look at the first question as well. Question on Fortune. Fortune Nigeria Limited. Fortune Nigeria Limited is also a question that is somehow loaded. So let us look at it. We have what? Fortune Nigeria Limited, a reputable soap making company, is based in Lagos and registered over 10 years ago. The financial year end of the company is 31st December every year. The financial position of the company for the year ended 31st December 20 was as follows: turnover, cost of sales, gross profit, other income. All are figures. The dots: admin expenses, director remuneration, staff salaries and wages, rent, advertisement, transport and traveling, postage and communication expenses, public relation and entertainment, miscellaneous expenses, sundry expenses, repairs and maintenance, depreciation, gift and donation, subscription, cleaning expenses. Then we have a net profit. All our figures. Further relevant details are as follows. So they now give us some details relating to the company. We are provided with some details relating to the company. So some of the details given to us. So some of the details given to us, we have the first one. Included in other income was the sum of 850,000. Was the sum of 850,000 earned as profit on disposal of assets. Salaries and wages included housing allowance of 10 senior management staff who were paid the sum of 200,000 each per annum. 1/4 of the expenses on rent was paid on the apartment occupied by the father of the managing director. Half of the assistant cost was incurred on sponsorship of a television program where airtime was allocated for the promotion of their product. Public relations and entertainment of 3,150,000 included the sum of 308 paid as commission to a sales agent. The breakdown of miscellaneous expenses as follows: cost of computer hardware, furniture and fittings, cost of fuel and lubricants, fitting and stationery. Then we have the total. The amount incurred as gift and donation included the following. We have donation to Egba community for town hall development, donation to University College Hospital Ibadan, gift to gubernatorial candidate for electionary campaign. Breakdown of amount paid as subscription is as follows: subscription of staff to the Institute of Chartered Accountants of Nigeria, subscription to Recognized Trade Association, subscription of staff to Nigeria Institute of Management. Agreed capital allowance amounted to 725,000. Then required: compute the tax liability of Fortune Nigeria Limited for the relevant year of assessment. The same way we did in the first one, we need to look at what will be the year of assessment. In looking at the years of assessment, so we look at the info. We are giving information for 2023. So that means the year of assessment will be which year? 20 what?
24.
2024. So 2024 year of assessment. So year of assessment will be 2024 year of assessment. So let us look at. So computation, we have what? So Fortune. So we have the name of the company, Fortune Nigeria Limited. So computation of tax liability for the year of assessment will now be 2024 year of assessment. We are also giving information about net profit. Abi? So we have
Yes, sir.
provided information about net profit. So you just leave the net. Please, when you are giving net profit in the question, don't say because you have two approaches, you have turnover approach. Don't go and use turnover approach because the information provided may not be sufficient to adopt the turnover approach. So you must what? When you have information about the net profit, use what? Use the net profit approach. It's only when the examiner did not give you net profit that you have to use what? The turnover approach. So net profit, 10,886. So we have the net profit to be 10,886,000. After that, we now add what? Disallowable expenses. So let us go to the question. Let us look at the expenses one after the other. We have director remuneration, staff salary, rent, advertising, transport and traveling, postage and communication, public relation, miscellaneous sundry, repairs and maintenance, depreciation. Depreciation is what? It's one of the disallowable expenses. So we are going to disallow 650,000. So we come here, depreciation, 650,000. So after the depreciation, we proceed. Gift and donation, sufficient cleaning expenses. So we now go to the notes. They said included in other income was the sum of 850 earned as profit on disposal of assets. Salaries and wages included housing allowance of 10 senior management. 10 senior management staff who were paid the sum of 200,000 each per annum. That is an expenses. And what? It is what? Allowable expenses. Because what? It's part of what? The rent. It's rent for the business because those staff are also what? Employee. They are employee of the company. So it is what? An allowable expenses. 1/4 of expenses on rent was paid on the apartment occupied by the father of the managing director. The father of the managing director is not working in the company. So any expenses incur in relation to him, it's going to be what? Disallowed. Yeah. So rent, 1/4 of rent will be what? Disallowable. So rent, that will be what? 1/4. 1/4. So 1/4. So equals to, so rent will be 1 divided by 4, multiplied by 2.1.
Yes.
2.1 million. So that will give us 52,500, 525,000, 525,000. So 1/4 will give us 525,000. So after that, the next one, they said half of advertisement cost was incurred on sponsorship of television program where airtime was allocated for the promotion of their product. Do you think this will be allowable? Advertisement. Look at it.
Program. No.
Yeah. It's for what? It's advertisement on a television program. It's to promote their product. Is what? Is an allowable expenses. The one that will be disallowed is what? Where it is what? Capital in nature. This is not capital in nature. Assuming the advertisement now, assuming they decided to what? To erect a board, a signboard now. For erecting the signboard, you know that one is going to what? That means what? That asset will last for more than 1 year. It's going to be capital in nature. Where they are going. So, but this one is not what? It's not a capital expenditure. And it's just to promote their what? Their product. It's going to be what? It's going to be an allowable expenses. So take note of that. Then we have a public relation and entertainment of 3,150,000, included the sum of 308 paid as commission to what? Sales agents. Commission to sales agents. So they say public relation and entertainment. So you are not told of the entertainment. It's going to be allowed. But they now say commission to sales agent. Agents, sales agent, they are also staff of the company. They are entitled to what? Commission based on what? Based on their performance. Any commission paid to them is what? It's an allowable expenses for tax purposes. So that information is just included there by the examiner to cause confusion for himself. To cause confusion is also what allowable. Breakdown of
But
miscellaneous
sir,
expenses include.
sorry, sir. I thought PR and entertainment were disallowable expense.
Where it is not, no. Where the examiner, if you look at this PR and public relation, it's an allowable expenses. Entertainment that will be disallowed, where they tell you that entertainment that relates to, you are entertaining somebody that is not relating to the business. Are you getting it? That word PR, public relation, has made that information to be what? To be allowable. Assuming, look at it, assuming there is no public relation there. Public relation means that you are what? You are liaising, you are creating what? A cordial relationship between you and the environment where you are, between you and the public, so that there will not be what? Unrest between what? The company activity and the public. So that is what? An allowable expense. But that public relation that is attached to the entertainment has made it to be what? To be allowable. Assuming the examiner just say entertainment alone. Look at it. If the examiner just say entertainment alone, and the examiner did not what? Did not give you information about the entertainment, that will make it to be what? Disallowable. But that word public, it's straight together. The public relation has made it to be what? To become allowable. Do you get that now?
Yes, sir.
Hello?
Yes.
So the breakdown of miscellaneous expenses is as follows. Cost of computer hardware. When you buy computer hardware, what kind of acquisition is that?
More like capital in nature.
Is what? It's capital expenditure. If you are buying computer, you are not going to use it for 1 year now. It's a capital expenditure. With that, you are going to claim capital allowance. Is it going to be available? Is it going to be allowable?
No.
It's not going to be, because it is what? Capital in nature. So cost of computer hardware. So we have cost of computer hardware. That will be what? 650,000. Then after that, okay, 680. It's 680. 680,000. So after that, we have what? The next one we have is what? Cost of fuel, furniture and fitting. Furniture and fitting is also what? A capital expenditure. They are going to claim capital allowance on it. So we are going to disallow it. Furniture and fittings, F and F is also going to be disallowed. How much? 550. Then after that, we have a cost of fuel and lubricant. There is no this thing. So it is what? An allowable expense, because it is expected that the company, they will also make use of a vehicle for the purpose of their business. So any fuel and lubricant they buy, and it is not specific, unless where it's related to what? Personal. Assuming they tell us that it is personal now, so it's going to be disallowed. But since it's not told, we assume it is what? It's related to the business, will be allowed. Printing and stationery, they also expect them to what? To engage in what? Printing activities, so it will be what? Allowable. The amount incurred as gift and donation included the following. Donation to Egba community for town hall development. Is it allowable?
No.
No, it's not allowable. Egba community donation to Egba community. How much?
360.
3 what?
60.
360,000. 360,000. This is not allowable. 360,000. After that, we have what?
Donation to University College.
Donation to University College Hospital, Ibadan. Is it part of the list where donation can be made to?
Yes.
Yes, it's part of the bodies that donation can be. University is there. College of Education and Tertiary Institution is there. So it's a gift to a gubernatorial candidate for electionary campaign. Is it allowable?
No, disallowable.
Sorry, excuse me, 1 minute, please. Can someone please share the question? I don't know, because I can't get it.
The question is on the group.
I can't find it on the group.
Okay.
I was just
So
added, yeah.
Okay, you were just added. Okay. Let me
I'm sharing
check
it now.
Let me. Okay. Oh yeah, help
I'm
us check
sharing
it so that. Yeah.
I just shared.
So you can. Do you have access to it now?
Yeah.
Hello. Yeah. Okay. Yes. Okay. All right. Okay. So the next one is what? Give to a gubernatorial candidate for electionary campaign. So it's what? Disallowable. Give to a gubernatorial
Which page
candidate
is the
for
question? Which page are we solving? Which page is this?
question one. Question one page. What page? What page is it? We are presently on page 15.
Page 14 and 15.
14.
14 and 15. 14 and 15. But we have moved to page 15 now. We are
Okay.
towards the beginning of page 15.
All right, thank you.
That donation. Give to gubernatorial candidate for electionary campaign. So
It's
that is also
disallowable.
disallowed. Yeah. Give to gubernatorial candidates. How much? How much is the value? 490,000. 490,000. So after that, the next one we have what? Breakdown of amount paid and subscription is as follows. Subscription of staff to Institute of Chartered Accountants of Nigeria. Is it allowable?
Yes, sir.
Yeah, it is allowed because they expect you that you should belong to recognized professional institution as working for your company. And by belonging to that, you are also going to add value to your organization in order to increase their revenue. It is allowed. Submission to recognize trade association. Is it allowed?
The word
Yes, it's what?
recognize. Yes.
Yeah, that word recognize has told you that it is
It's
what? It is
allowable.
allowable. Submission of staff to Nigerian Institute of Management. Nigerian Institute of Management. Is it allowable? So is it a professional body? Nigerian Institute of Management, is it a professional body? That is what
Sounds
you
like
ask
it.
yourself.
Sounds like a
NIM.
professional
You
body,
guys,
but I don't know them.
you've not heard of NIM before? NIM.
They are
Nigerian Institute
recognized.
of Management. Yes, they are also a
Mm.
recognized professional body. It is
Okay.
also recognized, NIM. So subscription of staff to it is also what? Allowable. So all this information included here by the examiner is just put there to cause what? Confusion for himself. So the examiner just put them there to cause what? Scatter for himself. So with that, so you now go to, so that will now lead us to the total of this, which is what? Which we have as 2605. So the total of that will give us so the total will give us this figure. So after getting the total value, and this thing is giving me something else. I don't know. Okay, yes. That's giving me the correct answer now. So after that, we add what? Taxable income omitted. There is no taxable income omitted. Example of this income. So I need to explain. You may see, they may tell you that was part of the turnover was understated. If they understate any amount of the turnover, just add that amount. It will be what? Amount that was omitted. So you add it as part because it's supposed to be what? Part of the income that is supposed to be what? Subject to tax. Then we also have a less allowable expenses omitted. So is there any allowable expenses that they omitted when they were computing? No. There was none. No. Then we now go to the less non-taxable income. So included. When they were doing, if you look at the question, yeah, you can see other income.
Yes.
In the question, we have other income. In addition, in note 1, under note 1, they said included in other income was the sum of what? 850,000. N as profit on disposal of assets. 850,000 N as profit on disposal of asset. Any profit on disposal of what? Asset on the disposal of investment is what? Is not what? Taxable under CETA. It is what? This taxable under what? CGT. Because it is believed that the company will not, is not what? It is not the nature of the company to what? To sell their asset. That is not the business they are expected to be doing. So profit on disposal of what? Of asset. So profit on disposal of asset, 850,000. So we look at it, 850,000. So this 850,000 now. So we are going to remove it. So this total information now, this will now be equals to, so we add the net profit plus disallowable expenses minus non-taxable income minus the 850. So we give us this equals to this plus this minus, okay, minus this. So we give us the accessible profit or adjusted profit. In this question now, we are not told that there is any loss. The only thing we are told is what? Agreed capital allowance amounted to 725. No loss. That means this company does not have a loss. So in the exam, you don't need to put this one again. Just eliminate this. Because what the company does not have what? Any loss they are bringing from where? From previous years. So since there is no loss, so it will be. Then we also have what? The next one we have is what? Capital allowance. We are told the capital allowance is what? 725,000. So you are going to bring that. Capital allowance 725,000. So what is the nature of business of this company? Yeah? Hello?
This accessible profit. I'm not getting this figure. I don't know if I'm the one getting it wrong.
You are not getting the figure?
Yes.
What are you getting? What did you get?
13,261.
13,261.
The profit on disposal is 850 now.
Yeah. Is what? 13,261.
That's what I
That's
have.
you are getting.
Yes. Let's just continue. Maybe I don't know.
The first one is, look at the information you did first. 10,886 plus 3255. 3255.
Okay, 255. Yes. I've seen
3255. Okay.
Yes, I've seen it. Thank you, sir.
Yeah, okay. So the capital allowance now, you are going to relieve capital allowance. So you now look at what is the nature of business of this company. We are told in the question that this company, we are told soap making. That is what they are engaged in, what? Manufacturing.
Yes.
For manufacturing business, do we restrict their capital allowance?
No.
No, there's no manufacturing and which company? Which two category of company? Agricultural, yeah, agro-allied or agricultural business. So that means there is nothing like two-third, no restriction. So in that case, you are going to charge the entire of 725,000. So you are not looking at two-third of this amount for this company. Why? Because they are into manufacturing and any company that is manufacturing and agricultural, there will not be any restriction of their capital allowance. Please let us take note of that. So this capital allowance, so we are going to remove this amount 725 from this amount 725 from this amount. So capital allowance, so we now give us taxable income. We now give us equals to this minus 725. We give us 12,566. So this taxable income now that you now base the tax liability on. So you now go to the question again. Look at the turnover. What is the turnover of the company? 1 million and 1,000, 100 million and 1,000. What category of company can we categorize this company?
Medium. Sorry,
medium.
large.
1 million.
Large.
Yeah, what? Large now. It is 1 million. Anything 100 million and above is what? Large company.
Okay.
So large company. So it will be what? Large company. So we have what? So which is what? 30%. We're also going to apply the 30%. So 30% of this amount will give us 3769. I believe is correct. 3769. It will give us that value 3769,800. Then also, you are also expected to calculate your minimum tax. In calculating the minimum tax, you now go to what is the year of assessment we have here is what? 20 what?
20,
What's the year of 20 what?
2024.
2024. So let me now. So we have 2024. So that same thing, that information I told you that the examiner is going to give you, I'm going to upload the information again. Let us look at it. So to get to what is the tertiary education tax rate for year 2024. Look at it, looking at it, look at the tertiary education tax. Look at it, yeah. Number 5, you can see 3% of accessible profit, which it fed from where? September 1, 2023. So what percentage are we now going to adopt here?
3%.
So that means what we are going to use what? So the tertiary education tax will be 3. But before we go there, we also have minimum tax. So what percentage, what will be the rate of the minimum tax?
Is 0.5.
0.5%, because 0.25% is only applicable to which year and which year?
2020 to 2021.
2020 to 2021 year of assessment. So let us take note. So this one will be 0.5% of gross turnover. So we need to get what is the gross turnover? Because in this question we are not giving. So gross turnover now. So what will now be our gross turnover? So we need to calculate gross turnover. So when you go back to the question, so let us go back to the question. Did they give us? No, now
Yeah,
they
am I not looking at
they
the
did not give
question?
us gross. They gave us only turnover. They gave us turnover. Gross turnover is addition of all the income. For this one now, they didn't give us the gross turnover. They gave us only what the turn. So gross turnover will now be what? This turnover, which is 100,000,001 plus other income, which is 2,750,000. Do we get that? Gross turnover will be what? Addition of what? 1,000,001 plus 2,750,000 other income, because we are not told in the question. So gross turnover will be turnover, which is 100 million and 1,000 plus addition of other income. But assuming the examiner gave you that figure straight away, you don't need to stress yourself. Just use assuming the examiner puts on that one, he puts gross in front. That's what you are going to use. Like the second one we did, it was stated gross. So the total of this now will now give us what is called gross turnover. This is your gross turnover. So which is the addition of these two information. So this gross turnover now, we are now going to apply what? Is 0 what? We are going to apply 0.5% on that. So if you apply 0.5% on this amount, what do we have? Somebody should help us do that. The 0.5% on that times 102,751. We have 513. Abi, is it correct? I have 513. The answer will give me 513,755. 513,755. So which one are we going to select? Which one will be selected? The higher or the lower?
Higher one.
The higher amount. So that means we are going to select for the company income tax. After that, we will also calculate for tertiary education tax. We have established that this one will be at 3%. So tertiary education tax will now be 3% of, look at this profit. It will be what equals to 3% of accessible profit. Tertiary education tax is based on what? Accessible profit. So that will give you what? The 3%, so which is equals to 3% multiplied by accessible of accessible profit. This is our accessible profit. So we'll give you what? The value for the tertiary education. Don't forget what I told you, where the examiner asks you for what? Total tax liability. Add the two amounts together. The two amounts together will give you what? The total tax liability. But where the examiner did not put the word total there, you only what? You separate them as well and separate items. So let us take note of that. So that is what. So with that, you can what? You can have a lot of what questions that will be what giving on what company income tax. And this particular topic is ICANN friend. So please don't let us what? Don't let us play with it, because what? It's usually what? Tested by what? By ICANN. So because it's a good top, it's a topic that is usually tested by them. So any question? Any question? Any question?
I have questions, sir.
Okay, I'm with you.
My question is based on the PR. Like in my place of work, would you the work the income, or what's it called? Our business based on contract. So whenever there is a contract, we normally give
Okay.
the people in charge of approve that quotation money, and we normally put.
Okay.
Is it?
Hello. Hello. The network is bad.
Hello, sir.
Okay,
Hello,
I
sir.
can hear you now. Yeah.
Okay, I say where I'm working. The business the company does is contract, and
Okay.
whenever they are to approve this contract, people in charge to approve. They will normally give them money, and we call it PR. Is it allowed?
Okay. Yes. Looking at it, that PR you are giving them. Looking at it, it relates to your what? To you acquiring contracts for you to generate the revenue. Did you get that? It relates to generation of the revenue. So with that, it's going to be what? Allowable, because it's related to generation of the revenue. PR can be in any form. It can be PR you are giving to see job, or PR you are providing to what? To your community. Some company also call it PR. So it's allowable.
Sir.
Yeah?
Yeah,
Okay.
so the thing is that this PR we are talking about, I don't know, in real life, in the face of tax, these people usually disallow PR, whether it's for business or not.
Wait, that is why I'm telling you that depending on the nature of the what, if it is, them too, they also collect PR.
Yes.
Tax authority also collect PR. Is that
Yes,
not so?
and even entertain them.
When they collect PR, no. The entertain PR is different from that. Was the reason why I told you that PR is different from entertainment. That word PR they put in front of that entertainment is what made us to allow it. Assuming that word PR is not in front of it, PR and entertainment are not the same thing. They are two different things. Entertainment will be disallowed if you are not if it is only when you are entertaining your staff. Are you getting it? When you are entertaining your staff, then that will be allowable. Or when you are entertaining key personnel, like now, you said one of the things I mentioned when we started, I told you that part of the representative of the company is what? A company must have what? A legal representative. They must have what? An auditor and what? A secretary. The auditor, they will need to come to the one when they are doing statutory audit. They will need to come to the company premises to come and carry out what? Their statutory audit. When they come and carry out the statutory audit, you are going to give them what? Entertainment. Those entertainment are what? They are key to what? Because they are also what? Those are what? Statutory officer of the company. Those will be allowed. But when you are entertaining anybody apart from your staff and those people, it will be what? Disallowed. It's a different thing from PR.
Okay, sir.
So PR, yeah, it's a different thing from PR. That word entertainment, that word PR they put in front is what made us to allow it. But when you say entertainment, once it is not specific, you disallow it. Please take notes. Any other question? Any other question?
Sir, please help us send the solution to the group after the class.
Okay, all right. I will do that. So any other question or request? Okay, thank you very much. So we are going to stop the class here today. So we'll continue next class. So we are going to start. So before we stop, yeah, we have, before I go, we have 4 bases. 4 bases of what? Computing what? Tax liability. Abi, for company income tax. Is that not so? We have treated what? Total profit, and we have also talked about what? The one minimum tax. Who can tell us the other 2 bases?
The net profit and turnover.
No. We have a turnover basis and one last one. Which one is the last one? Dividend basis. We have turnover basis and dividend basis. At your level, at the level of skill, so you are expected to know what? The minimum tax and the what? Total profit basis. So at the final stage, you are going to what? You are going to be taught the other 2 bases, which is what? The turnover basis and what? And the dividend basis. So it's just what? So the examiner just wants you to know that there are 4 bases, but you know more about it when you get to what? To the final stage. So please let us take note of that.
Sir.
Yeah?
So that the total profits method now, we have only treated this net profit approach, right?
Yes, we have, because the net profit is what, yeah, we have not, the reason why we did not do turnover is because the net profit approach is the major one. But if you want us, do you want us to also treat a question on, so I will help you look for a question on the turnover approach so that you can also use that to illustrate. So okay, before we start the next class next week, I'm going to first of all treat a question on what? On turnover approach. So we'll use that to illustrate the turnover approach so that you also have knowledge of it as well. So any other question? So in the absence of no question, so we'll see you next week. Have a lovely day ahead.
Please don't forget the solution, sir.
Okay. I'll send it to the group.
Sir,
what did you say?
The next topic.
The next topic. Okay. Yeah, I'll send it to the group. Don't worry. I'll send it to the group.